Hello YouTube, welcome back. Hosanna here from Chicoto Trading. I'm excited to bring you this video because of course we're going to be doing some chart work. We're going to be looking at the market in depth, and of course you don't want to miss out on all the analysis and all the juice we are going to bring you in just a moment. But before we do that, we want to thank all of you who have subscribed. Right now we are 2,600 subscribers. We're closing in on 3K really fast, and I cannot thank all of you enough. Of course, we just started this channel a few years ago, and here we are, getting close to 3,000 subscribers. Please hit this like button, like the video, share, and of course subscribe to the channel if you're not. And we want you to be part of the family. We want you to be part of the movement. We believe we're going to hit 5, 10, 15, 20K, even 100K in the future. And of course, we want you to be part of this journey with us. So in this episode, we're going to do a very, very deep dive into the technicals. We're going to look at EURUSD, a particular currency that is the most traded in the market. So one of the things we want to do is we want to make sure that you are trading with clarity. And on Wednesday here, we also have a webinar coming up where we're going to be doing some live trading. And the reason I am putting out this video before then is that there is a very good chance that the trade might mature before Wednesday. Of course, I know I promised you live trading in the webinar. And if the trade matures before Wednesday, I'm going to actually take the trade and hold it probably into Wednesday. It just depends on what the market shows us, depends on the condition that we find ourselves in the market. So I want you to actually take your time, pay attention, make sure that you learn as much as you can from this episode. I'm not going to be doing a full analysis like I would on Wednesday, so please make sure that you are there so that you watch the complete process. But in this particular episode, I'm going to be showing you what I'm looking at in EURUSD, how I'm looking to approach it, and of course, what valuable lessons you can take away from that as well, and how you too can approach it depending on your style of trading. But the most important thing is, regardless of how you trade, whether you trade the way I trade or not, the most important thing is that we all make money at the end of the day. So please make sure that you like, share, and of course subscribe, and I will see you on the charts. All right, traders, so guys, I'm on the screen now, and I'm using a white board today. I'm using a white background today primarily because from the last video I made where I showed my screen, I think you guys requested that I use a white, but I think you are not seeing the dark one very well. So please let me know if this is clearer. If this is clearer, please leave a comment. Tell me it is clear. Otherwise, the dark one is actually much better for my eyes. So that's exactly why I don't use the white one. I mean, it's really bright. And so getting very quickly into the video. Euro dollar, we're going to just start from the monthly chart here. Or better still, let's look at this on the weekly, so that, I mean, we're going to be looking at a lot more together during the webinar. During the course of the webinar, we're going to dive deeper. But for now, just have a look at this, what we actually have. So one thing we do know for sure is EURUSD was in a downtrend. And then we switched, and this is actually this whole move here. You must reckon with the fact that it is actually a correction of this whole bearish wave here. So this is sort of corrective as well. So now we had the market, we created this high, and we ran lower, didn't break this low, traded into this order block. We just ran lower, and this low did not break this low. So this low did not break this one. So we between here and here, we have a failed low similar to this failed low we have between here and here. So please, this is not chart pattern. This is not, I think this might be, maybe it's expanding or something. I don't know what, but please, this is not chart pattern. So we have this high, the market came, took this high, and then eventually we came back down, didn't take this low. We ran up, cleared liquidity, took the high, ran back down, and then there's a failed low here. Now, having this failed low here, of course, we still have liquidity sitting at this high here, completely untaken. We have this liquidity untapped, and the reason I don't want to have too many of these lines is that's why this thing is here. So if we take this buy side liquidity here, we also reckon with the fact that we have another buy side here, sitting at this high here. So this is a very, very crucial point in the market. So we have this point and this one. These are very crucial areas within the market that we are looking at. So one thing that we're likely to see is we also reckon with the fact that this particular ray line here, you can see that we have a fair value gap. Let's see, or we have imbalance or whatever. Imbalance as fair value gap, as ICT prefers to call it. So here we have this here, between here and here, this is a fair value gap. The market could come back down to close it this week. We never know. And there's actually a lot of news coming on within this period in the market. So you really want to be careful and not get too excited with all these things that are currently going on in the world. Or don't try to push your luck. All right, don't try to push your luck too far. Please don't do that by taking very aggressive trades and all these things. Don't be aggressive. Just relax, and hopefully the market will be on your side. So we have this fair value gap in here on the weekly. So this is a weekly fair value gap. The market could trade in to close this week, and subsequently we continue to run higher for all of these here. So the market could trade in, close this, and run higher. Or better still, depending on what comes out, we could just continue to take it from here and go all the way to these highs, and then subsequently these highs as well. So right now I equally have my eyes on the economic calendar as well, and tomorrow, Tuesday, we have quite a lot coming out, very high volatile news coming out on the US dollar and the CAD, especially the CPI on the CAD, and we equally have the new home sales coming out from the dollar. So we have quite some news coming out this week. So, and then Jerome Powell speaks on Wednesday as well. So all these things are very solid news that could actually shake up the market. But for now, one thing I want you to pay attention to is we are in this particular side of the market, right? Yes, we agree that we are coming from here, right? Bearish impulse, this is correction. But as far as we are looking at, remember this is a weekly chart. As far as we're looking at this side of the market, let me circle that properly so that you understand. As far as we're looking at this side of the market, I want you to have an understanding of the fact that we are bullish. Because if you look at all these numerous candles here, a vast majority of them are green and actually heading in one direction. And you cannot negate, we cannot negate the bullish move because of these few candles that I read within this price action. So this is actually another way for you to look at this market. So right now we are best suited for the uptrend. We want to stay with the trend that we can see in front of us, which is impulse. We want to see another leg come up high again. So we want to stay with the bullish market. All right, so please keep that at the back of your mind. Always stay with the trend. Trends are very easy to identify. I know it could be difficult for a lot of people, but when you get down to lower time frame and you start wondering what's going on, but I want you to understand that trends are actually easy to understand. Just look at the direction the market is going and just go with that and try to find an entry. Okay, so looking at this, we have this fair value gap. The market could come, close this out, close out this fair value gap, and ultimately in that process we'll liquidate the low of last week, because last week we came back, traded to this low, and then closed here. So there's a very good chance that the market could come back down and liquidate all of that. But for now, we never know. So I mean, for those of you who trade support and resistance, I mean, you could find support and resistance level there if you look at that as well. But what we are actually looking at is the fair value gap, and the fact that the market is printing higher highs and printing higher lows as well. We have a high, this high goes above, and then from here we have a low. The market makes a higher high here. So this is a failed low for this one. So this is one thing we want to keep our eyes on. So there's a very good chance that within the week we could come into this area, and if the market falls into this area, we're not going to get excited and say, oh, we're going to hell immediately. No, we're not going to do that. What we're going to do is that we're going to identify it as an opportunity for us to buy into lower prices. That is what we're going to be looking at. We want to buy into lower prices, and we also want to trade into liquidity. We want to be buying all of this sell stop liquidity here, because you will not believe it, there's a lot of liquidity right below this candle here. So right below last week's candle, or right below last week's low, oh god, there's a lot of liquidity right below this level. And of course this one here as well is a very obvious liquidity. So these are areas in the market, I don't want these lines to be everywhere actually, but these are areas in the market where we could be seeing price trade into to pick up orders, and then we use all the orders we pick up around here, maybe from here, we use that to buy into this market. So ultimately, we're still looking for a market that will run into this buy side from here to here, and we're also looking to see a market that will run all the way from here to here. And if something extraordinary happens within the market and we breach this low, of course, that would mean for us, that still remains the fact that it is not a break in market structure yet. Where the structure is lying is here. So until we breach this low, because if we breach this, we can still use that to go further. We can still breach this and go further in price, although that would be a very, very long distance trade from there. But structure is not broken until we take out this low, because this low produced a high and this one has not produced anything substantial. So until we breach this low here, that is when we have the break in market structure for real. So for now, one thing I do want to continue to emphasize is there's a very high chance we could come back down, close all of these, and then take the markets the other way going forward into the new week. So please, this is just a very quick one for you guys to actually hold on to. During the webinar, we're going to actually look at this in more detail. We're going to look at this in very, very great detail so that you can have a deep understanding of what we are looking at, why we're looking at it that way, and then how we position ourselves for big moves within the market. So please make sure that you are there and you sign up for the webinar. All right. So it's a Tickmill webinar. The links for the webinar will be in the description. Please make sure that you sign up, and I will see you on the inside. All right. Thank you very much for staying with me up until the end. It was nice really showing you all those things on the chart, and I hope that you've taken away very valuable lessons from that as well. So please make sure that on Wednesday, June 28th, you sign up for our upcoming webinar. The link will be in the description. Make sure that you do not miss this webinar. It's a free webinar. It's absolutely free. It's a Tickmill webinar. It's sponsored by Tickmill. I'll be making the presentation on Tickmill's behalf. So please make sure that you are there. Make sure that you connect with us in the webinar and watch the live trading. Hopefully, even if we don't take the EURUSD trade now or whenever we take the trade, I'll just make sure that there will be something for you to go home with. We're probably going to find a live trade on that Wednesday, and I will execute just like I did in the last episode, in the last webinar. I executed a trade live, and of course this time around we're going to be doing the same thing, so that you can see that what we are talking about are things that you can actually trade within the markets with confidence, and you will make money long term. So until I see you on Wednesday, I wish you good luck and good trading. Cheers.